friends. Today we're taking a look at PepsiCo, ticker symbol PEP. We'll be looking at the last 5 years of the performance of the stock. We'll be taking a look at the last earnings and the upcoming earnings. We'll look at the last 10 years of fundamental numbers, dividends, and stuff like that, and try to find a, a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Pepsi is a company that is beloved by a lot of people, that especially that in the dividend investments. But however, in the last 5 days, is down just a little bit, 0.6%. In the last month, it is up 1.8%. In the last year, is down almost 8%, and in the last 5 years, it's at 37% up. Analysts believe that it will continue to grow in the next 12 months and reach maybe a target price of somewhere around $188, which will be an upside of about 12%. They are going to be reporting earnings on April 23rd. They are paying a dividend of $5.06, which will be about a 3% dividend. Right now, they are trading at 25 times their earnings and trading at $168. So let's look at the earnings. The last earnings that they reported was in February 9th. They beat on normalized EPS, but they missed by a lot on GAAP EPS. So they missed by 79, almost 80 cents, and they reported 94. So that's quite a big miss. And they also missed on revenue by almost half a $1 billion, which I don't know about you, but that's a lot of money for me. Looking at the upcoming report, which I believe it will be next week, they're looking at a lower EPS at $1.52, with way lower revenue estimation from almost 28 billions all the way to 18 billions for the quarter. And all the 14 revisions have been down for Pepsi. So as we go into checking all of the last 10 years fundamental, I will ask you to please subscribe to the channel, leave a comment. If you want to know more about the Pepsi company, just look at my first video. I talk more about what they do and all of that. But I would like to ask you, do you know, or do you have an idea of why the Pepsi company has been doing not so good lately, and why a lot of these revenues are going down? I know that some of the problems, what I've read, is that they're struggling with the cost of some of the main ingredients for a lot of their things. As inflation is going up, then their cost of goods sold continue to grow, and that affects the earnings. When it comes to revenue in the last 5 years, it's been growing a nice last 5 years at 6.7%, while in the last 10 years it's been growing at 4.2%. So I'll probably use somewhere around 5% of growth as I'm estimating stuff. Gross margins, the average is at 55%, which is pretty nice. I like it to be above 60, but 55, that's pretty good. Earnings, as you can see, has been growing at a steady 4.3 to 4.47% yearly CAGR. Their profit margins are a little low at almost 15%, and I like that between 20 to 25%. So as you can see, 5% seems reasonable for me whenever I'm calculating the growth of Pepsi. When it comes to free cash flow, it's a little cyclical. It goes up and down a lot. In the last 5 years, up 8%, but in the last 10 years, almost just close to 1.4%. Free cash flow margins at 10%. That's low for me. But the free cash flow yield is pretty nice at 3%. Book value per share, it's been growing again since 2016, 2017, although it dropped significantly from 2014. In the last 5 years, going up almost 5% every year, and in the last 10 years, it's 1.4%. Return on equity, it's at 50%. That's pretty nice. Return on asset is at 9.3%, and return on invested capital at 15.5%. Those are the last 5 year average. Those are really, really nice. Dividend continued to grow. They're growing it at 5.4% in the last 5 years, or if we look at the last 10 years, almost 7%. That is way nicer than their competitors like Coca-Cola and other places. That's a very nice growth. Payout ratio is a little high at 77%, but it's not something to worry too much about. When we're talking about long-term debt, it has been growing at 5%, but they're not crazy high. I like companies that can pay their long-term debt in less than 5 years. And as we can see, it will take them 5.5 years to pay all of the long-term debt with the free cash flows that they have. So that will be something to watch, their long-term debt, and do a little more research. When it comes to their shares, they have been buying shares back. Last 10 years is about 1%. In the last 5 years, 0.3%. That's not crazy fast. So I think, like I said before, I'm going to be using a 5% when I use my multiples and of what I'm thinking that it's going to grow. But I just want to remind you that I'm not a financial advisor or a professional. I'm just a YouTuber that is just giving their opinion for educational and entertainment purposes. Please not consider my advice. I actually am looking for your advice. Let me know what you think. What are some things that I may be missing, or other ways of maybe looking at Pepsi. When it comes to the historical multiple valuations, it seems like a fair value has been somewhere between $165 if you were to pay the average per share numbers, or trailing 12 months, it will be close to $187, which is, I believe, close to what the analysts are predicting. That should be fair to, it will be a fair value for Pepsi. When we look at the revenue base, if we grow in the next 5 years and we do some of this math, you can look at it, pause the video, and look at how I come up with this idea, this calculation. I get it from another YouTuber. His name is the Patient Investor. So you can go to his channel and get some information on how he does this. But we're looking at fair value today, discounted at 15% a year, of close to $209. If we use the discounted earning valuation, which we grow the EPS numbers at 5%, which is the one that I'm using, then multiply by 30 times their earnings, and then discount it back, we're looking at a fair value somewhere around $112 to $125. I know that's a big discount, but I'm looking at a 15%. So we do the same thing with the free cash flow, growing it at 5%. And if we were to just receive all that payback in 8 years, we're looking at somewhere between $110 to $130. At this kind of free cash flow growing at a 5% using a free cash flow per share multiple of 32. We're looking at a fair value somewhere between 127 to $150. Looking at an owner's earnings valuation using a PE of 30, we're looking at somewhere between 185, sorry, to 190. We put everything together, and a fair value for Coca-Cola, it comes somewhere around $160, which is a little high of what we're looking at right now, but not too far away from the lowest on the last 52 weeks. So if we wanted to be a little more patient and maybe take a play on this and have a 15% margin of safety, we'll be looking at somewhere between $35 to $140 per share. My opinion is Pepsi is a good company for those that are later in their years, in which they want something a little more more stable that produces some income. I'm looking for more for growth. I'm a little young and I want to grow my portfolio. If you would like to get your own valuation sheet and change some of the numbers and look at different scenarios, you can get it on my Buy Me a Coffee is down there in the description. And if you have any questions or any comments, tell me where I got it wrong. If there's any company that you would like me to analyze, just write it down in the description. And I really appreciate your support. Subscribe to the channel, and I hope to see you in the next video.